Hello, everyone. Today, I'm happy to see Marc De Mesel, famous investor, famous crypto investor, and we are streaming live on YouTube and Twitter. I'm sharing here the link to Twitter. We'll be featuring questions from the audience. Mark, it's great to see you. As always, thank you very much for finding time. And let's speak about investment in this hard year, which I would describe this year not so easy, both global and for crypto community. Maybe let's start with sharing the percentages of your portfolio, which you often do on your Twitter. I will put the link to Mark's Twitter in case you are not subscribed, because Mark is giving a great investment views, and it's always very interesting to read you. So, Mark, how are you, and how is your portfolio doing?
Hey, Andri, thank you so much for the invitation. So happy to do an interview with you. It's a long time ago that I did an interview with anyone. Maybe the last one was with you over maybe a year ago or so. Time flies, and I'm very honored that I can have this chat with you. What is your Twitter handle that I can find it to retweet?
I sent it here to the chat. It's
Hmm.
Flodner. I can
Ah, I
also
got it. Yeah, I got it.
I'll
Yeah,
send it to you to Telegram.
yeah.
Because this stream it goes live to YouTube and to Twitter,
Great. Okay,
and then
that's good as
I'm
well.
sharing it, of course, to crypto blogs. Um, or maybe, by the way, this I will do the text version also very fast today or tomorrow, because now with this advancement of AI, there is a new software which transcribes YouTube much better than it used to be in the past.
Ah, cool. Can you still hear me now?
Yes, I can hear you, but the video is,
Ah, yeah, frozen.
yeah, it's frozen.
Great, great, great. So,
And now it's okay. Now it's
so
okay.
I've also retweeted it, um, and so let me double check that that works so that my audience can also check, join to see the question, to shoot questions and make comments. That's always fun. Okay, that worked. So that's very good. And your link it goes to your link. I don't know. This does not seem to go to YouTube. Is that
Yeah,
going to YouTube? No, huh?
it's streaming
On
directly on
Twitter.
Twitter. Yeah, directly on Twitter.
But people can make comments then. Ah, streaming directly on Twitter.
Yes, yes, they can
Yeah.
do comments.
Ah, that's good. That's very good. I didn't know that was possible even. So yeah, um, great to see. You will keep an eye on the comments then on Twitter, huh?
Yes.
Great, great. Um, are you also streaming on YouTube?
Yes, on the YouTube.
Ah, okay. Should we share that link also?
Maybe, yeah, I can share it too.
Mhm.
I will do it. I'll send it.
Because I'm not used to like I've never seen a live stream on Twitter and then you can make comments. I've not seen that before.
This
So,
I'm using Restream software, and it's very good actually, because
huh?
it streams to multiple platforms. It's
Okay,
also
nice.
I used to stream to Facebook, but on Facebook page I don't have that much of the audience. But I'll need to figure out which other platforms have a
Hmm.
good audience.
Could you also share it for me on Telegram, the YouTube link? I will post it then also, or maybe
Yeah,
on
I
YouTube,
just did it.
maybe on Twitter, as a reply to your tweet, huh?
Yes, doing this now.
Then people have it also.
Yeah, and I will also write and will tag you now.
Great. Yeah, so uh, maybe I can start with a few comments on yeah, the difficult year that it is right now, 2023. I can certainly relate with that. Um, I find it extremely difficult. But first to share my allocation, because I agree with you that that's the most important thing. Um, because stock is stock, actions count a lot more, and you can tell a lot about people, someone's beliefs by just knowing how they have allocated their capital. So for me, that's 50% crypto and 40% growth stocks, and then I have just some small investments in commodities, 10%, and that's it basically. I mean, you don't even have to mention investments that are less than 5% because they don't make any difference or barely any difference on your returns, huh? Um, except when you're talking about a very small, maybe cryptocurrency or a very small growth stock where that I becomes in 5 years or so a major player. But those are the very rare investments that have not, I do not have in my portfolio. So yeah, that's my allocation. But I have to say that I have lots of doubts about this allocation, and very often I have this urge to diversify and to sell off a piece of my crypto and my growth stocks in exchange for gold and gold mining stocks, um, or bonds. Um, that's really on my mind to do so because there are a lot of red flags in the stock market. I have not so much confidence that the stock market will not make a new low. Um, that's really what caused me the biggest doubt. And the growth stocks I'm invested in are not the kind of stocks where I can say, look, I know this company through and through, and no matter what the economy does, these companies will do very well. No, that's not the case. Huh? And yeah, I'm invested in stocks that I followed, picks from other people, huh? And so I don't have so much confidence in that. Huh? Um, to the contrary, my cryptocurrency selections, and for example, what kind of growth stocks am I invested in? Um, well, my biggest position is basically Tesla options, but that's managed by a hedge fund. But that's about 10% or so. But then I have also like 25% or so other stocks, and those are companies like Zoom, um, Teladoc, um, DraftKings, um, and yeah, these companies, Ruko, I don't really know. I just follow other people's opinions here, and so my conviction is not strong. Um, and I'm considering to sell those for gold and gold mining stocks, but I have not pulled the trigger. Um, so that's where I am.
Yeah, I see. Thanks. And as I remember, in past you used to have more percentage in cryptocurrency, like 60%.
That's right. And actually, typically at this time of the cycle, in this time of the cycle, I would be actually 80% or 70% crypto in previous cycles. But the reason why that's not the case is because I really burned myself badly with leverage during the previous bear market, and um, I continue to be exposed to 60-70% to crypto as the market was going down. But I continue to be liquidated also because I had a DeFi loan that was only 10% or so originally of my portfolio, but as my portfolio tumbled through the floor, that became 20-30%. I got margin called, and I had to sell crypto to pay down the DeFi loan. And and actually that happened again at the bottom. At the bottom, I was um, invested 60-70% in crypto, but I got another margin call, and in one swoop, I got liquidated actually, and I lost like 40% of my crypto. Huh? And in one liquidation event, and I was just beaten through the floor, and I went from an allocation of 67% to 40%, and I said to myself, okay, normally what I should do here is I should sell some other assets to bump up again my crypto exposure, but I said to myself, I'm not gonna do that because I don't deserve it. I don't deserve a bigger crypto exposure. I fucked it up, and I'm gonna remember this for my life, not to take these kind of risks anymore. And so I remained at 40% allocation, and therefore 60% other investments, which was mainly like growth stocks and maybe some a little bit commodities. So yeah, that's why I'm only at 50% crypto currently, despite crypto having done very well. Huh? But I've also, like, I should have been at 60%, but actually I sold down about 10% of my crypto already when Ethereum was around 1,700 to pay down half of my DeFi loan, because I refused to close down my DeFi loan when I got margin calls. My last margin call was around $1,200 Ethereum, $1,300 Ethereum. That's like now 3 months ago or so, or 5 months ago. That was the bottom. Also, the second bottom of Ethereum. The first bottom was 900 or $800, but then it went back up strongly, and I had expanded my margin loan again. I had taken more DeFi loan to invest in more crypto as the prices went back up, and I was able to do so. But then Ethereum went up to 1,600, but then went back to 1,200, and I didn't see that coming. And that's where I really made a big. I got a big margin call, and I lost a big piece of my crypto. So, but I still had like half of my margin loan, DeFi loan open, and I could have decided to close it all, but then I would have very little crypto left. So I had to basically, I didn't do that, and I kept my DeFi loan, but I said to myself, okay, if prices recover, first thing I need to do is get rid of this DeFi loan, because it's a bad loan. It's too much. It's just a bad loan, something I didn't realize before, but yeah, now I certainly am aware that certain loans are good and others are bad, and you should avoid the bad loans and try to only get the good loans. And so that's why I'm building down a DeFi loan now already quite early, and that's why I'm have a low exposure to crypto relative to previous cycles. Yeah.
Yeah, that's an interesting question, especially for new investors. The notion of the loans, what is good to take, or maybe uh, better not to take the loan in general. And another question is how to distinguish a good loan from the bad loan. That
Yeah. Yeah. So that's something I've learned the hard way, but I think any loan that's able to call you when things go bad is a bad loan. Like if you take a loan from a friend and he says, okay, I will borrow you the money, but you know, if your company goes bad or your project goes bad, I'm gonna force you to pay me back. Right when your company or project fails, huh? Or let's say you go to a bank and the bank says, okay, I'm gonna lend you money for your real estate, but if your real estate drops to the floor and goes down by 50%, I'm gonna force you to pay it back in one swoop. And so you will have to sell your real estate after it went down 50%. If that's the deal, that's a bad loan. Huh? You shouldn't take such loans because you have to pay back right when you can't, and you're going to lose all your assets and be forced to do so in such an event. A good loan is where, well, that's the loans you can get from friends, fools, and family, where they say, okay, I'll borrow your money and I'll pay you back when I can. Huh? That's a good loan. Because then when you're down and you can't pay back, or the value of your portfolio is down a lot, well, they can't force you to pay back. You don't have to pay back the loan. You can just only pay it back when things are going well and you're able to afford it to pay back without taking a big hit yourself. That's a good loan. And that means there are not many good loans in this world, but there are some. There are the loans, not DeFi loans. Those I know also not leverage you get from your broker, because those are all bad loans. Also, certainly not all these products that contain leverage. Those are all bad loans. But the good loan, the only good loan I know that is available is mortgages, because the banks actually won't force you to sell your real estate if you're down 50%. They don't do that. And why they don't do that is because they get a bailout from the central bank, or they go broke, and even when they go broke, they don't force you to pay back the loan. Your loans are just sold to another bank, and that new bank will not force you to pay it back. Also, I'm talking about private residential real estate here, not about commercial real estate, but and not about company enterprises and that. No, but like that, those are the deals in the West. Those are good loans, mortgages. But other than that, I don't know any good loans. Um, uh, so I've decided to only take those loans, and I've decided that I will go into real estate for that reason also, because, well, and another reason also is that, like, my portfolio has been extremely volatile over the years, the past 10 years, and now it's the third time that I lost a major, that I've lost like over 80%. Like I've lost twice 80%, but now I lost 95% at the bottom. Now it was even worse than before because I made more mistakes. But like I don't want that anymore. Of course, I'm getting too old for this. Too many children, too many ladies to take care of, and the wrinkles are starting to show. And I, I need much more stability in my portfolio. How can I achieve that? Well, you could, for example, keep a certain percentage of your portfolio in cash. That will already, if you say I'll always keep 25% in cash, for example, well, that will stabilize your portfolio a lot, because as prices go up, you're forced to sell, and so you make less profit on the way up. But then as prices collapse, your cash position becomes very big very quickly, and you're forced to buy back some assets, but so you will go down a lot less fast. So that's one way to bring stability into a portfolio. But I really don't like cash because it's a bad, it just it's the returns are below inflation always, even today. If you get 5%, it's still below inflation. Well, actually, that's inflation, but it won't last long. It will probably go down again. And so cash on average returns like are very bad. And then, of course, you're also investing in the government, which is also not from a moral standpoint a great idea. But another idea I've been playing with is like, why not do real estate? Because that's actually a hard asset, and it's actually also not volatile. Of course, it depends when you buy also and where you buy. But you can manage to buy in countries where real estate did not just have a big boom, but prices have been flat for 5 years or 10 years. I mean, chances are extremely low that that will go down considerably in value, except if a war breaks out. But like, actually, on that, I have a question for you. How are real estate prices in Ukraine right now, since the war broke out?
It might be strange, but they didn't fall so much, especially in the capital, in Kiev. So right now, almost for a year, it's already, I would say, safe in Kiev. There is a chance of some missile strike, but last time it doesn't happen last months. But even when in the March of last year, when the Russian troops were near the capital, and it wasn't understandable how it will end for many people. There was no big drop in the real estate, and then for some time the prices kept the same. The only thing is that because many people really left the country, and there are more, I would say, like hot options. Because if the person, I think it's everywhere, if the person wants to sell something quickly, they need to lower the price, and it can be way below market price. This happened, and I think in general, uh, the prices for real estate, if to buy, especially on the not on the secondary market but from the real estate developers, they fell a little bit. But also the rate of hryvnia, national currency, to USD, it fell. So if you think in dollars, so there is not a big difference. It feels like almost the war did not affect real estate market, because the prices were falling a little bit anyway because of the, I think, general economical situation. And also what's of course in the cities which are in the south and in the east, the prices fell, and it's understandable. But at the
So
same
by
time,
how much?
um,
Like by 50% or by
maybe
20% or by?
yeah, maybe something for 50%, and it also depends from which cities, because cities which are closer to the front line, like Zaporizhia and Kharkiv, the life is going on. Unfortunately, there were more damages, and just being there takes more risk than being in Kiev or in the western Ukraine. And the prices fell. It's hard to say which percentage. Um, and what's interesting that on the west of Ukraine, the prices rose, and both rent and sell prices, and especially in the cities like Lviv and Uzhhorod. Uzhhorod, which is near Hungary, uh, I saw some diagram. The prices rose, I think, more than 100% there, because it's relatively small city. It's nearby Carpathian. It's in Carpathian Mountains, and it's near the border, which is like almost. If you have a car, you can live there and travel to Central Europe easily. And in that region, there is no curfew hour, because we still have a curfew hour in all of Ukraine, apart from that Transcarpathian region. It's probably the most distant region from the war. So even the pessimists who might believe in the future escalation and nuclear war and other can consider that place as safer, because mountains nearby, and good ecology, uh, and also in the rent business, I think, of course, the demand is much smaller than it used to be, because there are less foreigners. But the demand exists because those people who unfortunately had to move from their cities in the east, in the south, people who were under occupation, they are looking for another places to live. Some are living in the country, but many stay in Ukraine. So they need to rent something. So there is a constant demand, but it's smaller than it used to be. I would like to ask, in real estate, which countries, maybe geographical locations, are you considering in general, and what is the way you usually go with some maybe company which proposes, or you go to the real estate developer directly? I think in this case you might get the bigger, best price, and in general, the more you buy from one real estate developer, the best price you get, as I understand. What is your way of considering this area?
Yeah, let me get back to you. First, I want to check when you talk about prices in Ukraine. You talk is in US dollars or in local currency?
Well, the prices in local currency they rose for everything because inflation is going on, and going to the shops, you can feel that the prices rose. Comparing to dollars, the
No,
prices
I mean when you talked about real estate prices, were you talking about US dollar prices or local currency prices?
in US dollar prices.
Ah, okay, so it doubled 100% in US dollar in that one city, huh?
Yes, yes.
Okay, and it went
Usually,
down in US dollar. It went down by 50% or so in the war zone area, close to the front line. Hmm?
yeah, maybe even more. This is something I will need to check, and it also depends from the even in the one city there might be several locations. And in Ukrainian real estate, usually people count in dollars, prices in dollars.
Okay, good. Yeah, so but it's an example of like even when war strikes the area where you have real estate, then it's not like a simple case of oh you will lose everything when you're in real estate. No, like it's actually very rare that we're able to see examples of this because war has become very rare actually the past 50 years in the West. But here we have an example where we can see like actually it's not that the whole country drops by 90%. No, even then actually some places go up, others go down, but on average it stays quite flat. Even in a currency, a stable currency like US dollar. People don't lose much. Even in a country where it's struck with war, on average maybe they lose 10-20%. In real estate, that's not a disaster. It can get a lot worse when you invest in crypto or in growth stock. You just lost 90%. Eh? So real estate is a quite stable asset, and actually the average returns of real estate is around the same as the average returns of the stock market, which is that it goes up with inflation plus some extra thanks to rental income. Um, and and then if and that means that in US dollars that's around 7% or so that it goes up real estate per year, um, which is actually more than, for example, gold that goes up with only 5% in the long term. And why is that? Because well, in most places, land has become more expensive thanks to population growth in the West, either mainly due to immigration in the West, but even in the East, Eastern Europe and Russia, okay, you have a lot less immigration there, but um, what you do have is that people have become a lot more wealthy, and that is expressed in the land prices also. Huh? So so real estate is actually a good investment. But then of course there are periods where it's really in a bubble, and then you shouldn't be buying. But for example, if you look at the United Kingdom, in contrast to most other places in the West, it did not go up the past 5 years. Actually went sideways since 2016-17. Prices have not gone up in expressed in pounds then for the United Kingdom, which is very different, for example, from Belgium or Switzerland or the United Kingdom, United States or the Netherlands. Their prices have gone up a lot the past 5 years and have at least gone plus 30%, sometimes plus 50%. So that's a different story. But the United Kingdom, for example, I think it was because due to Brexit, they left the zone, the European Union, and that has caused a lot of companies and individuals to have to leave the United Kingdom, and they have to leave London, and has caused a depressed climate that's different from other regions. And I think that's because why real estate hasn't gone up there for 5 years. But of course, rental prices did go up and did go up a lot, and that shows that it is still in demand, real estate. And if you look at the cycles in the United Kingdom, for example, I looked at those charts for the past 30, 40 years. 40 years, well, and it's everywhere like that. If real estate went down sideways for 5 years, well, very likely it's gonna go up for the next 5 years or 10 years, and it will catch up to that average of 7%. So if it went sideways and you have like 0% for 5 years, well, you're probably gonna have 12% for the next 5 years, so that you get an average of 7% or so. So I think that's a more likely scenario to happen in UK. But the reason why I never invest in real estate is because, of course, you become a landlord, and I didn't want that. But now I found someone who's actually interested to do all that hard work for me, where we would work together. Usually people do that together with their family, their brother or sister or their mother, or their children, where they buy some properties and there's only one person that needs to manage it. The other ones don't need to be bothered by the tenants. That's how that's manageable, because of course many people don't want to be a landlord. That's a bit the problem. And for me, I've always been against real estate for that. Like, the average returns are too low. But I've changed my mind on that, because I don't look at it anymore as an asset that really needs to bring the performance to a portfolio, because indeed you're not going to get there. Every butcher, every baker, every lawyer, and every doctor is investing in the real estate. There is so much competition there that the average returns are only a little bit higher than inflation. That's true. But uh, then you have the good loans that enter. If you take advantage of the good loans that you're able to get, then actually for your money you cannot buy one property, but actually you can buy three properties, because or four, because you're able to borrow so much money against it, and so you can leverage it up, and you are not at the risk of a margin call. At least that's how it works in the West. I don't know if it works like that also in Ukraine. If you get real estate loans, can they ever be called, or they are also never called?
Well, in Ukraine, there were problems with real estate loans because it was really something very hard to get. And usually the loans were from the developers, from those who are building real estate. But the loan, you could take a loan for the real estate which is under construction. And when usually when the building is going to be finished, the loan is ended. So that's not so a good deal. Actually, many people used it because that's really easy way to maybe double the amount of investment in some time, because at the stage when the building is only starting to be built, it's really lower price, and sometimes it can increase like 2 times, or there were cases in certain real estate then 3 times. But the problem is also the big risk, because some developers which the risk still is that they cannot finish that real estate, not complete. Then it's also very important to make the research and choose really the best and reputable developers. The bank loans were usually something like 40% of interest. But right now there is some new program which proposes like 7% loan. 3% are going to some particular categories, like teachers, scientific researchers, military people, and the state servicemen. But 7% is good, because in general bank loan was, firstly, it's hard to get to approve, and then the percentage was really like something like 40%, sometimes more. Yeah, so that's
Yeah,
it.
is that in US dollars, the 40%? Is that a US dollar loan?
It's in hryvnia loan, because real estate is counted in dollars, so people evaluate in dollars, but the transactions are made in hryvnia, in local currency.
Okay, yeah. That's hard to judge then for me. What's the interest rate? Because how much did that lose, that currency, for example, the past year versus US dollar? Do you know that, since the war started?
Yeah, it lost quite significantly.
Yeah,
It
of course.
used to
So
be.
that's a different story. So of course there are many markets where actually you can't get bank loans easily, and the interest rate is very high. At the time when I was in Kenya, I was also surprised to see that, yeah, bank loans actually it's a very different world out there. You pay, wow, 13% to 15% interest, huh? And that's a lot more than at the time here it was 2 years ago. It was like 3% in Western Europe or so for a loan. That's a lot less. And if you now look at inflation rate, well, my estimation was that inflation was here 5%, whereas interest rate was 3%. So actually, you make a profit. However, in Kenya, inflation was maybe 10%, but the interest rate for a bank loan was 13%. So, yeah, you have to, of course, judge all these things. But in the West, many people that watch these shows here, they have access to bank loans that are very long duration and very low interest rate. And of course, the climate has changed now. Interest rates went up a lot. So the question is, and indeed, I predict continued rising interest rates. But and that's why I was also very negative actually towards real estate up until recently. But actually, I've changed my mind studying the real estate prices in the United Kingdom more in depth. What I saw was that actually, and I thought that was not the case, and it probably depends from area to area, but real estate price went up a lot in the 70s when the interest rates went up a lot also. Huh? So we always think that, oh, as interest rates go up, that will put a cap on the valuations of real estate because mortgages become more expensive. But what you see, for example, in the United Kingdom, and I think that was also the case in the United States, and like homes that were sold for $10,000 or so in 1968 or 1970, well, that was $30 at the $30,000 at the end of the 70s. In 10 years, real estate prices went up a lot, huh? But interest rates went up a lot also. How is that possible? Mortgages did become a lot more expensive. How come real estate then, still goes up a lot? I don't know, but that's what happened. Eh? So that's why, like, I'm more open to, and also there is an alternative scenario. Even when indeed real estate prices would not go up due to rising interest rates, while rental prices, they are going up. They can also go up a lot, eh? And that also is okay. Like, let's say your real estate didn't do as well, or didn't go up, or not as much, but your rental prices went up a lot. Yeah, that's also okay. Eh? I mean, we're not expecting stellar performance from such an asset. The point of it is not to bring that, but is to bring more of a stability in a portfolio. And so as I was explaining about leverage, there getting the good loans, because even in if you get a bank loan, an expensive bank loan, in Ukraine, for example, where you have to pay 40% interest, huh? Is it callable or not? That's the question. Is there not too much noise here with the door? Should I be walking outside? Is that
That's
better?
okay. That's okay. No, be as it's comfortable for you. The noise
Okay,
is.
but they will gonna keep the door open. That's better. So, is it callable or not? Do you know that? If real estate prices go down in Ukraine, are they able to say that bank, okay, actually, we're going to close this loan early here, and we're going to force you to pay it back when the real estate price went down? Is that something you about?
No, usually it's the way that if you pay earlier, then you have to pay like with all the percentage. And if you can't pay, usually I don't know actually. I don't remember
Yes.
such cases. But if you just don't pay the ordinary bank loan, then there is this long process. So um, what they can do, they can move your profile to some collecting company, and they start bothering you and calling and imposing additional interests. Um, I
Yeah, but
think there is also a
that's
way
the
to
scenario where
sell.
you don't pay your monthly down payments. No, I meant that when your collateral goes down in value, that's the problem with bad loans. Then they will call you to pay back the loan when your collateral goes down a lot in value, and that's right when you don't want to pay it back. Have you ever heard of that they do that with real estate loans in Ukraine?
No, I think they don't do it. Yeah, I
No.
just think there might be two types of the loan. One type of the loan might be in hryvnia, national currency,
Mhm.
but another one might be tied to the dollar. So, for example, if hryvnia rate falls, then you might be maybe you should pay more in hryvnias. So, as I think the dollar rate might be fixed. So it might be fixed at the time of the loan, or it might be not fixed.
Mhm.
And by the way,
Yes.
about
Yeah.
yeah,
Go ahead.
about did you consider this resort real estate? Because it seems that it's also interesting market. So when you invest, you can invest either in existing projects with some developer company, or you can do it everything from the scratch if you find like good manager, somebody to do it.
Yeah, I think those are more like that's all possible, but there's more risk, a lot more risk. That's basically commercial real estate. No, like that's not of interest to me. There is very low risk in certain areas of real estate, but it's much more in the residential real estate, I think, than in the commercial. But of course, the returns are a lot lower also. Um, uh, but so yeah, I think even like I'm now looking at a project to invest in residential real estate in London, the United Kingdom, and you can lever that up. You can get loans. Let's say it's like 6% or 5% interest to pay, but you only need to pay the interest and not the capital. And then what do you earn from rental income? Well, it's maybe about the same or a little bit higher. But basically, what you're getting is you're basically getting a property, and you need to pay down maybe like 20%, and basically 80% is borrowed or 70%, and you're betting on the valuation, because the interest payments are the same as the rental income, but the rental income is going up clearly. So even if interest rates go up, you might just be able to cover the interest rates, just continue to be able to cover interest rates, rising interest rates, thanks to a rising rental income. And then the question is what happens with the underlying property value? If it goes up, you're going to make lots of money. If it goes down, will you lose lots of money? No,
Yes, yes,
you
because you
don't.
paid only 20% in the beginning.
Yeah, because you only own 20% of the place. It goes down a lot. Or as long as you're able to pay the interest rate with the rental income, it doesn't matter. Yes, you have in your books, you need to say like, okay, the value of that 20% you put in is now maybe cut by half. Yes, but you don't need to lock in that loss. Huh? Nobody's calling you saying, hey, now you need to like pay that back the loan, and you lose the property. Huh? No, huh? You can, as long as you keep paying to the bank what they want from you every month, you're fine, and you can keep the property. And in the long term, all these things just go up. Huh? So even if in a bad scenario, you're okay, except in extreme scenarios where indeed you're right in a war zone, you don't have any rental income, and you still need to pay the interest. Okay, then you have a problem, but that's a very low probability to happen. And you can diversify real estate. You can have properties in different countries or in different regions in the same country, and then you're already covered. So that's what I'm playing with, that idea.
Yeah, so recently you are studying more real estate and some other investment areas, and not cryptocurrency area. Or are you following crypto world and what's going on there?
Not in detail, but of course I'm following the big things, but not the small things. I'm mainly invested in Ethereum now, um, and then also DeFi, DPI index, and then also a little bit of Bitcoin Cash, but not as much at all as I used to be have before. So basically, I'm betting on the biggest player, which is Ethereum, which is the easy play. And I've only a few smaller projects, but I don't even like study it. I outsource it to other people to make some selections of smaller projects for me.
Mhm. And how is this DPI index? How is it doing?
It took a big beating. It went from $400 to $50 during the bear market. Now it's back at $80. Yeah, I think it's okay, but I think it's not the better investment. I think Ethereum is still the better investment now because we're in early bull market, and then the most solid projects go up the most in the beginning, or the biggest projects go up the most. You can actually Bitcoin BTC goes up even more than Ethereum this first stage. That doesn't mean it's a better project, but it's normal that the money looks still for safety, and the new players they always go for the biggest projects, and so that's a normal thing to happen. So I do think Ethereum is still a better project right now than DPI, but that can flip more quickly as we expect, if indeed the bull market goes more quickly than we expect. So holding a small position of these smaller projects is still, I think, not a bad idea, but the biggest position should be the bigger coins right now, I
Yeah.
think.
So, but you are still considering if there will be some new project, you might take a look at it. Yes.
Yeah, or I just outsource that, and other people do that for me. Yeah. Yeah, yeah.
Well, what about stocks? You mentioned today Tesla, Zoom. For example, regarding Zoom, I remember how it went so up during coronavirus, during the beginning of coronavirus. Uh, but then how it performed? Don't you think that it might be overpriced? Because right now there are so many software program which is similar to Zoom. Like right now we are speaking in this Restream and another software, and there are so many messengers, so many ways to communicate. Uh, and about Tesla, how it's performing.
Yeah, I agree with you. And Zoom is for me not a strong conviction play. It's just like a bunch of growth stocks that dropped so much that it's ridiculous. Of course, the valuations were also ridiculously high before, but even on a dead cat bounce, these things should be making money. Huh? So even if you're right that Zoom will lose its market share, it still can bounce considerably. Um, so but also like I followed the lead of others there. There was not Sweaty, who had a YouTube channel, a Twitter channel. He sadly closed it down, but he made some calls on videos on certain growth companies that he liked, and one of his selections was also Zoom, and also Katie Wood also is a strong believer in Zoom. So I follow their lead more, their judgment more, without having done any research myself, where I can give you a strong thesis for the company. No, I can't do that. But I trust these people have done their research well, and have good reasons to believe that this company is a good investment.
Do you still follow Kelly criterion in your investment decisions?
Yes, I do. I do. It's still very much there. Um, but I should do it still more. Huh? But I do, yeah. Yes, it's there. Kelly criterion is very important, I think. Yeah.
Yeah, and
So also, yeah, go ahead.
so maybe the last part of our today's conversation about investment of your personal time in your girlfriends, and how are you doing in this area? because I mentioned for those maybe some new viewers that you spoke a lot about this topic on your channel, and this also we can use this analogy of investment of time, because time is the most scarce resource.
Yes, absolutely. A very interesting topic. I would like to check first to the Twitter questions.
Yeah.
What did we get any interesting questions there, or on YouTube?
Yeah, let me check.
I don't immediately see anything on Twitter.
Yeah, I don't see, but maybe that's also because we didn't announce this conversation.
Ah, yeah. Okay, good,
Yeah.
good, good. Okay, so
Maybe
maybe it
for the
will
next
come
time
later.
we'll announce in some I don't know, week
Yeah.
period. I'm also getting more active to YouTube interviews because that's really interesting for me to grow the channel and to grow media, to do the text versions, because this will stay and people still visit, read these topics. However, of course, because of the market situation, that's not so popular as it used to be before.
Yeah. Yeah, I think um, uh, uh, I'll make a final conclusive remark on the markets.
Yeah.
So yeah, I'm still invested for the most part, 50% crypto, 40% growth stocks, and I think that that is the right call. It's in the end, results is what counts, and what of course risk adjusted returns is what matters. Like okay, it's not only a return, it's also what kind of risk did you take to make those returns. That's important also, because it's easy to get high returns when you take tremendous risk, but sooner or later you're going to get severely punished for that, and your average returns will take a big hit, as just happened with me also. My average return was 40-50% at the peak 1 year ago, 2 years ago. Now it's only 20%, and that's because I really fucked up. I took way too much risk over the years, and I paid the price for that. So that's why I'm really convinced I should take less risk, and that's why I should like have a piece in more conservative investments like uh, real estate, but I would still do it leverage because that's where the opportunity lays. And gold mining stocks, like commodities, are inversely correlated to stocks and even to crypto the past year. So it is a great diversification, a much better one than so many other bad diversifications, such as being long and then also short to stock market. Like that can really blow up in your face. Or options, put options and call options. All these things are very actually. I burned myself with these instruments, and that's why I really lost a lot more now than in previous cycles. Because in previous cycles I stayed away from all these advanced instruments, and I've learned the hard way. Like that's really not a great way to hedge. It's very difficult. It's dangerous, expensive, and the hedge can totally fail. And but that's not the case when you invest, for example, also in commodities. They are really inversely correlated to stocks, proven over hundreds of years. And it makes also logical sense that they are inversely correlated. So that's why I also strongly consider to do a bigger allocation to commodities. Right now, it's just uranium for 10%, but I consider to push this up to 20-30%. Um, and but also outsource because it's a very difficult sector to invest in, but some people are specialized investing in commodities and make higher returns than the market. And for example, I've been following someone who's called Van Damme. First it was the father, Roland Van Damme, and now it's his son, Jan Van Damme, who have been publishing a newsletter in Belgium for 40 years, 30 years. And but the portfolio starts somewhere in the 90s, have an average return of 20%, and they share every position that they take, and you can see exactly how the portfolio is composed. And so you can just copy their portfolio, and you will have similar returns. They've succeeded in having good returns also during the bear market of commodities, while also continue to invest in that market. That's very difficult to achieve, but there are people like that. So I'm considering strongly to also start a piece in my portfolio for that. And I'm still busy with the Kelly calculations also, all these things, lots of work. and we will talk a little bit about it, how little I work these days, and that's for me the right call. But yeah, to do an actual Kelly calculation takes for me lots of work. Huh? You need to really think about upwards potential, downwards potential, how much, how likely is that to happen, and only then you're gonna have a Kelly calculation where you get a scientific or mathematically counted, advised allocation for a certain investment. Um, the reason why people don't do that is because it's hard work, huh? And that's a bit the problem here. But so that's what I'm considering to do. But I'm trying to really like not pull the trigger too quickly on these things, because in the end, returns is what counts. And if I do that now, and crypto doubles over the next few months, while these new investments that I take in the real estate and gold and commodities don't do anything, well, that's not that's not cool. Like, that's a big problem, especially after you just lost 90% of your portfolio in crypto, due to basically crypto and growth stocks. And then the market goes back up, but you sold most of it, towards sectors that actually have done well, because gold and commodities did do well the past 2 years, and they may even go down now. Like that's a very bad move. You really have to try to avoid bad moves. You also have to, patience is a virtue, and I've really have not been patient enough in the past, and that has also costed me a lot. For example, I did invest in oil tankers as one of my big positions, actually, but I sold them off right before they went up, and it was the only commodity position that I had in my portfolio, and I sold it off right before basically the war started in Ukraine, right before commodities started to go up a lot, and right before stocks started to go down a lot, but commodities not, actually they went up. Huh? But that's also right. And I sold all my oil tankers. So patience is a virtue, and I think here right now, you know, actually there's still lots of fear in the market in crypto as well as in growth stocks. Huh? People like, there's lots of skepticism towards this rally. Huh? Many people don't believe in it. Sentiment is still bearish, actually. Even though crypto went up from a bottom of 800 billion to 1.2 trillion, that's 50%. Crypto went up 50%, but most people in the crypto market are still very skeptical towards this rally. Huh? And even though the bears have become quiet, they are still bearish. They're not calling for a new low anymore from 16K to 10K for BTC. They don't, of course, they don't say that out loud anymore, but they still think it. Hmm? Most people still fear it, and that includes me. And but that's how you get shaken out of a position. That's typical. The start of a new bull market is full of doubt, because everybody thinks it's just that got bounce and it's gonna go lower again. And so what happens with many people is that, yeah, they lost a lot in a certain asset. They don't want to sell as it goes down. They refuse to sell. But the moment it goes up, they sell, and they're out. And they don't. They make the losses, but they don't do the recovery. And that's why I really very hesitant to execute these ideas of real estate and gold and commodities right now. But as the market goes up, and certainly that's my new plan for the future, instead of remaining investment and trying to time the top, I really lost so much due to that strategy, because that's why I lost so much. Is like, I thought it would go a lot higher in 2021 crypto, but it didn't. It started to go down, and I didn't sell anything at the top. I didn't lock in any profits, and that's why I lost so much. And that's really too risky of a strategy right now. My approach is to follow the Kelly criterion gradually, and so my recommended Kelly allocation for crypto was 60% at the bottom. While that's still there, however, the probabilities need to go, like, you have different variables in the Kelly, such as, do you do half Kelly or full Kelly? Full Kelly has more risk than half Kelly. I did about 60-70% Kelly at the bottom, but now I pulled that down to 50% because the market is not so extremely bearish anymore. There's more risk now, so you do a normal 50%, a half Kelly, and then instead of a recommended allocation of 60%, I have a recommended allocation of only 50%. And so that's how I do that now, and that means that I don't feel bad actually selling off some crypto to pay down some DeFi loan, because that's also what the Kelly criterion recommends. As prices go up, you know, Kelly recommends a lower allocation, huh? And I'm planning to follow that more gradually now, and have that money then flow more gradually into these other investments, real estate and gold and commodities. So that's my plan for this market.
Great. Thanks for sharing this plan. Um,
So let's get into the ladies and the babies now, and the time for family. Um, so really, I changed a lot because I went through a very big crisis. What happened in Kenya really shocked me to the core. And at one point, I feared losing my freedom, and being imprisoned, and then you lose a lot. Huh? You're ruined. You will be ruined financially, but also you lose basically your family. Huh? I mean, you don't lose them; they didn't die, but you lose your freedom and you're stuck in a prison. Huh? And that's really, yeah, a terrible thing to happen. Huh? And that made me really look different at life. Like I woke up to some things that I wasn't aware before. I had become uh, arrogant in life, and I was too impatient for many things. Also in my relationships, I was too impatient towards my girlfriends for them to improve as housewives and do a better job in the cooking and the cleaning and taking care of the kids. Like I was too impatient for them to grow, and I was rude at times towards them and towards other people when it didn't go fast enough for my liking. Towards people that worked for me in a restaurant or Uber drivers, at times I would be just arrogant because they were too slow, and uh, 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 that's a lot less now, uh, luckily. um, and um, and yeah, I spend a lot more time now just, yeah, with my kids and with my girlfriends. They've also said that I've changed for the better, and yeah, I'm very happy with that. I used to really be a workaholic. I would be sitting in front of my laptop most of the time, and I would say to my girlfriends, "Take care of the kids. Take the kids away. I need to work." Huh? And uh, 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 that's different now. Um, and yeah, also, yeah, like I've done very well for myself. I lost a lot, but I'm still well off. Huh? And indeed, what's the most important? Huh? To be very successful financially or professionally, or to be average successful. And also it always comes at a price. You want to be very expensive, successful financially or professionally. It comes at the price of other things. You probably either your family or your health. Like if you put extra energy in certain area of your life, it's going to be at the expense of other areas, and so that's not a good trade-off, I think, anymore. And that's why I do work less. But it also makes that, yeah, I mean, I'm not so good in my job anymore. Huh? That's, I think, the truth, and it's just part of life. But I do. I'm better as a father now, and as a partner, as a lover, and as a husband. I'm better there now, and that's a good trade-off, because I don't need to be better professionally. I'm still well off. I can pay the bills, and um, so that's okay. And of course, I hope I'll still do well, but not by paying such a high price on the other fronts.
yeah, it's also hard to judge in investment how much time you really need to to get the work done, because sometimes you might direct a big amount of time into researching some particular area, and then if you decide not to invest, or if it's not successful investment, then in a way this time might be considered not so effective, and you could spend it otherwise. By the way, we have some comments
Mhm.
here. One is from Pantera, that's our friend from read.cache and noise.cache. Still these platforms are working. um, that's There is no question, but hello Pantera, that's great to see you. I read your posts on read.cache. By the way, Mark, are you visiting read.cache, noise.cache? How
Yeah, I'm not using noise.cache because you have to sign up there, but then you also have to be invited. You cannot just sign up; you have to be invited. Huh?
I can send you invite.
Yeah, but even then, like no, I've changed my mind on the project. I don't think the project will succeed because, well, at the time when we started the project, Twitter was still controlled by the previous management, and there was lots of censorship. And to me, it seemed possible that there would be like other apps like that to take a piece of their market share. But and of course, what we saw with Noise.cash and Read.cash also is that, yeah, the feedback I got from the founder was that, without any subsidies, this thing is not growing. Huh? Without we us pumping money into the platform to subsidize the tipping, or these bots that are active on those platforms, they were subsidizing basically. But that's very, very expensive, and when you don't do that, there is no growth, and that means you're not sitting on a winner here. It's just like you need to have spontaneous growth without needing to put money into it. Like, people should be telling other people like, hey, this is really great and you should start using that also because there are many benefits. But that didn't really happen enough. Huh? It only happened by people that tried to make money off the platform, which comes out of my pocket. Huh? They would maybe tell some other people like, hey, you can make money here, but that's it. Huh? Like, there's not enough inflow of new users, and so that's why I don't think the projects will succeed in the long term, sadly. Huh? Also, competition is very important. Twitter has really upped their game a lot by being purchased by Elon Musk, and it's going to become a lot harder to compete in that area now that the platform is managed a lot better. Huh? So yeah, that's why I stopped being active on noise dot cash because I don't think pushing that, continuing to push that financially, but also by using it myself, will pay off. And actually, the much bigger problem here is Bitcoin Cash. Like, I really think that this project has taken such a severe beating price wise, but also, like, many of the projects really failed. And that's a big problem. Um, I don't know how to crack the nut. I've tried to support different projects, but I don't see any project that's really succeeding and attracting new users to Bitcoin Cash. Huh? Um, and so um, it's really sad because Bitcoin Cash has great fundamentals when it comes to how it's built. Huh? It's like you can build a very beautiful car that's really built fantastically, but if you're not able to get the customers, it doesn't matter. You need to close the shop, huh? Sadly, huh? And that's painful, but that's how it goes. You have to move on. Huh? It's like also a girl. Huh? She may be fantastic, but if she is not fundamentally deeply interested in you.
Yeah, but I continue to be on both platforms because my position that I'm on all crypto block platforms. Of course, in these times of bear market, there are less readers, less vision. From all crypto blocks, I think Hive is doing probably the best way, and actually Hive price of, because Hive is also, they have HBD kind of stable coin, and they have Hive. It rose. It's rising a little bit. And we have also the question from the tattoo school. Do you see it? Do you agree to some
Yes, I
analysts
see.
that we will have a pump on risk on the next 3-6 months and then a temporary crash because of recession kicking in?
Yes, I agree with that, and I'm following closely Sonny Mulder, who's also a personal friend, but he also has a Twitter, and he's also very convinced in that. And actually, Game of Trades used to be convinced of that also, but he has changed his mind fully. He's very bearish now, and he really thinks at any moment it can collapse. But I am of the same opinion as he was originally a couple months ago, and that Sonny Mulder also still shares, is that yeah, I think it's much more likely price to go up right now for risk on assets. But what I also find very interesting is that crypto has really changed. Like, I never expected that during a bank run and bank defaults, crypto would go up. I would have never expected that. Huh? And that's what happened. Huh? And that's very interesting. Is it manipulated? Well, no, I think, well, it's just that probably many people had stable coins, and actually stable coins were also at risk due to that bank default. And that's why stable coins were put into cryptocurrencies, and that's why crypto went up. That's but that okay. That's interesting, because I already said, like a couple months ago, at the bottom of the bear, I had a big back and forth with Colin Calls Crypto, who was bearish at the bottom, and I said, and I made also tweets at the time, like, like his thesis was like, okay, I agree, on-chain metrics look very bullish, like we're clearly bottoming out here, but it doesn't matter, because if the stock market continues to collapse, if macro continues to be negative, crypto will continue to go down. That was his thesis, and I said, like, well, you don't know that. Huh? Yes, it's possible, and that's indeed what happened the past year. But we don't know how crypto will act in different kind of scenarios, such as a commodity bull market. That was also the idea here of many people, many bears, is that actually now gold and commodities will go up for the next few years, and actually it's over and out with the stock market. And then Colin Talks Crypto also said, like, that means it's over for crypto. Huh? But I said, no, like, we don't know that. Like, crypto is actually a currency, and actually currencies are, and it's a hard currency. It's like gold. It's much more like gold actually than it is like stocks. So even if we get a gold and commodities bull market, actually crypto may do very well in that scenario. Unlike growth stocks, who will do very poorly, and tech stocks, but crypto may still do very well, because actually it belongs to that class, even though everybody thinks now it belongs to risk on and growth stocks, to that category, but that may just be wrongly categorized. And that's very interesting that we see that right now, that actually crypto is going up with gold right now, and not with growth stocks, and that's very interesting to see. And actually responds to a bank default the way gold responds, and not the way growth stocks respond. So that's, I think, fantastic to see. So yeah, all that I find interesting. Yeah.
Yeah, great. I think we are speaking more than an hour. That was very interesting conversation. Thank you very much, Mark. I hope to speak with you in a few months and check your updates on the investment, on maybe this real estate project which you are researching, and we'll see how crypto goes that time.
Yes, and I really hope also you do well, Andre, and I hope that things settle down more there, the war, and that you can um, I move on to other things. That would be fantastic. Um, do you want to say anything more on that? Like, do you have the impression that the war is like going down? and that the stress and the tensions around all that, it's like normalizing? Or do you feel that things are still escalating? You have a much better view there, being in Ukraine yourself.
I think it neither goes down, neither escalates. So that's you know what we can say here, that both for the people and companies, it's important to find war work balance, or war work life balance. And it's just a lot of people, they adapted. It's interesting to see how the markets adapt. For example, last spring we had a fuel crisis. So for more than 1 month, the lines to get to buy benzene and gas, uh, they were huge. For maybe 1 2 months, then it changed. The supply lines, the companies, they adapted, and we don't have problem with fuel. Then Russians begin to strike on the infrastructure, and there was a period we had problems with electricity. So there was no electricity in many cities, and people adapted. People adapted, took candles, bought the generators, which work on the fuel, and really that's interesting. Also, these generators become for very limited time very popular good to sell. But now also these strikes on the energy objects, they were not so effective. The anti-missile systems improved, and this adapted. In many cities which are far away from the front line, the life goes on, and many people they adapted and they live in their lives. But I see the end of it only after the collapse of Russian Federation, when it will be separated into several states. Because that's the really this evil empire. They are doing where they came on those territories. They did very evil things. That's really genocide. It's the thing that the army prevented them to capturing more territories. That's why on certain periods, certain parts on Ukraine, like near Kiev, in Mariupol, they really did the genocide of the local population. But in some other parts, they tried to be more, trying to get the sympathies of the local population. So they were maybe not so cruel, but still it's very very hard to be. And even if the ceasefire would be implemented, well, right now there is like no political solution. There are no peace negotiations. The Russians, they don't want to speak. Sometimes they say they want to speak, but what is the solution for them? It's easier. They just need to stop the fire and move the troops before where they used to be before. That's how I see, if in brief.
Hmm. Yeah. Well, I think it's good that it's not escalating. That it's more like that it's more like stagnant, and it's not escalating into more war. That's good to hear. Let's hope it stays that way. For me then. um, so yeah, I want to add also something more to the but thank you for sharing, Andri. That's good to hear. So what the person there thinks about, asks about, do you think the next 3 to 6 months is going to up? It's a very important question, of course. But I think, yeah, like the way things are going, interest rates, the market says needs to go down. That's very important because the Fed follows the market. The interest rate on 10 year and 1 year and 2 year and on has gone down on bonds, and that's dictated by the market. Also, what I noticed is that actually sentiment is changing somewhat, becoming more bullish as the Fed has started to print lots of money again. You see some people in the market also turning from bearish to bullish. Someone famous is Chicken Genius also was very bearish up until a month ago, but now that the Fed starts to print money, he became bullish, and starts to invest in assets like Ethereum and Palantir. Still holds a big cash position of 60% though, but probably before it was 100%. So that's interesting to see. Inflation is also important and very likely will continue to go down in the West. And and these bank defaults, well, once the central bank starts to print, it's easy to not go broke as a bank when there is someone behind the scenes giving you bailouts. So I think that things will also in the market normalize a little bit more, and interest rates go down again, inflation continues to go down, and I think that will while the war does not escalate, there's lots of like things going on, but I think that's most likely to happen over the next 3 to 6 months, and in that scenario likely the trend that's been set will continue, which is markets become a little bit more positive, and therefore growth stocks go up, and crypto goes up, and fingers crossed on that scenario for my portfolio. So yeah, uh, thanks so much, Andri, for the interview. I really liked it a lot.
Thank you too. Have a great rest of the weekend, and we'll keep in touch.
Okay, bye.